Bitcoin still has a lengthy road ahead, but in this video, we'll briefly, and I mean briefly, discuss slowing inflation, what and how the CPI affects Bitcoin, and how some experts were shocked by the recent CPI reports to come out of the US. Cryptocurrency has become very correlated to the general ups and downs of the economy and stock market over the last few years, so it's crucial that we pay attention to certain news releases because they directly affect the short-term movement of Bitcoin, and as a result, the crypto market as a whole. One of these indicators is the Consumer Price Index, or CPI, which is an estimated number representing the cost of living for the average consumer. It's released monthly by the US Bureau of Labor Statistics, along with what's called the core CPI, which is an estimate in the change of food and energy prices. These numbers are a rolling average of the last 12 months, giving us the percentage change in inflation and the cost of goods and services. All you need to know is that the big players in the economy, the guys with lots of money, take these numbers very seriously. And if we get a lower number than the past month, it's a good sign and tells us that inflation is on its way down, whereas a higher number could be catastrophic for the economy and would trigger a drop in asset prices. The release for the previous month still had us climbing, which for Bitcoin, already being in a bear market, wasn't a good sign. Experts predicted that this month we would see further increases in inflation, pointing towards us entering a recession. Most predicted that the CPI would increase from an already staggering 9.1%, the goal is under 3%, and the core CPI would increase from its current position at 5.9%, far from its 2% target. So it's potentially great news, seeing as if you were watching the Bitcoin price, you notice that prior to the expected negative release, Bitcoin shedded 5% of its value, but within 15 minutes of the Bureau releasing the new numbers, it quickly gained back that 5%, showing us exactly how serious these numbers are to the big boys. The most recent release gave us a CPI of 8.5%, down nicely from the 9.1% of the previous month. This means that the inflation came down enough over the last month to bring the 12-month average down 0.6%, and we received a core CPI of 5.9%, the same number but effectively signaling a slow in increases as it had risen the previous month. What this means is that it's likely the US will slow down with their recent interest rate increases, as things might finally be under control. The rest of the world will likely follow, and we could see lower food prices, cheaper borrowing rates, and less expensive gas coming as early as next year. You can check out the release schedule for future CPI announcements here or at the Bureau's website, which I'll link below, so you can keep an eye on a future event that no doubt influences Bitcoin's price movement in the short term. That being said, this release was more important than usual for Bitcoin, as it shows us that the economy can now be on the right track, and if this continues, it will mean good things for all of cryptocurrency. Bitcoin isn't out of the clear yet, but less inflation means less hurdles Bitcoin has to cross before returning to previous highs.